What's up, traders? Gonna talk about harmonics.
No, they're no longer Christian. They no longer follow Jesus. They follow the devil 100%. Sing, bitch.
Alright. Let me clear my throat. Okay. Long smoky. We're gonna go through some harmonics today, fuckers. You ready? Gonna get right into it. Hope you're fucking paying attention. Alright, so the most important thing with harmonics is, well, the best thing about harmonics is they're very simple once you understand the ratios. And I'm going to show you a very simple way to remember those ratios. Okay? There is a harmonic that comes in at the 236. It's a 5-point pattern, and I'll show you that at the end of this video. Let's start with the 382 measurement. So what happens, and the way you label this is X to A to B, and this B point right here is your ability to identify this B point is going to define your success with harmonics. It really is the core and the foundation of any particular harmonic. So right off the bat, I know that if price stops here for my B point, my first kind of measurement, I already know that this is a cipher pattern. It can't be anything else. This is a cipher pattern. Right? So this 236 would be a 5-0 pattern, more complex. 382 is a cipher pattern. If it comes into the 50, that violates a cipher pattern potential. And if we are in the 50%, that would change this to a bat pattern. And I'll show you that right after. But let's go through the cipher pattern here. Okay, so this is going to be a bullish pattern. Everything is the same in reverse. So we have our first measurement at the 382. I'm just going to remove that Fibonacci retracement, and that was, right, I was taking my Fibonacci retracement from X, starting point, up to A. And on a side note, you want to make sure that you're locked on. Right? Notice how I have the magnet tool on here in TradingView, and it's locking on to the tips of the candles here. You want to make sure that it's locked on from your low to your high, or your high to your low. See, now that I've taken it off, you can't just have it sitting there like that, right? You can't just kind of have it close enough, because that's going to change the pattern entirely. Okay, so make sure that you're locking them right on those tips of the candles. So we have our first measurement, our 382. We see that it comes into 382, and then price starts to come back up, right? So once you start clearing back up here, tight stop, potential entry with a tight stop to the upside here. You know, because on the daily 4-hour type of thing, you've had a nice uptrend. You could easily be heading back up here. Just a really nice high percentage entry, much better percentage entry than you might think. But however, we're not trading that. You don't trade them until the pattern's complete. So what happens after we get that first measurement at the 382, we're then going to take another Fibonacci retracement, but this time you're going to grab it from your starting point. It's going to be at A, and you're going to run it backwards here. And what that does is gives you a 2-point measurement, a 2-point extension really here, as opposed to the 3-point proper 3-point Fibonacci extension for measuring moves extremely accurately. But for harmonics, you just need the 2-point measurement, and our C point needs to rally all the way up and come into the 127. Right, so very specific about these. The first measurement was at the 382, which is in fact the 618 when inverted. And those of you that are new to Fibonacci, these little things are really good to understand. We then come up to the 127 for our C point. We don't touch the 1414. Right? So we can come all the way up to something like that, but as soon as we start coming up here, boom, invalidated. It can happen that it'll come up here and then drop. By all means, if it does, feel free to take it, the trade, but I am very particular. I want to see these numbers get hit specifically. So, and they do quite often. And so we have our X to A to B, B to C up here at the 127. And then our D point, and this is our bullish entry, would come in. I'm just going to remove that Fibonacci retracement, keep things nice and clean here. You take your X to A, or sorry, you take your Fibonacci retracement from your X point up to your C point, just kind of measuring the whole pattern here. And you can see I have this lined up pretty good, just eyeballing it out at the 764. Not the 786. 764 plus 236 equals 1. 786 just happens to be a Fibonacci number. But anyways, so we do get that D point, and this is where you have a buy order place. So you can, you don't need to sit here and watch the market all day, every day. You can set your orders, right? When price comes up here, it's done everything. It's done all your criteria, and it's working its way back down here. You can just have a buy order sitting here. And, there is ways to calculate a little bit tighter entries. You can see I'm just kind of using the Fibonacci retracement tool here from my B up to C point. And that's giving me a 127 coming in very close to the 764. Just kind of extra confluence. You'll find those points line up nicely. And there's all sorts of little tricks with that, with Fibonacci. But to keep it nice and simple here, we're entering on the bullish pattern. On the we're entering a buy trade here, so it's a bullish cipher pattern, and we're entering at the 764. And what you do is you would have your so your entry would be here at the 764. You have your stops below X. I like the 113 to be super safe. If you want to risk even less, a lot of the times in between this 886 is a nice kind of area. I can't remember the ratio. I just heard it the other day. It's like 986 or something. It's a nice measurement too, but somewhere in this range for stop is quite all right. The standard rule though is below X. So your stop will go below X here, maybe 10 pips, whatever. Super safe is down here at the 113 if you want to risk a little more. And your targets would be, you actually open two positions here, okay? So we'd open two positions, boom, and boom. And your targets would be, I'm taking another Fibonacci retracement tool here, laying it from C down to D where we entered, all right? And our first target, because we opened two positions, so you have two positions just sitting here waiting. Market comes down, in a perfect world, fills it. Then you get your 382 is the first target. Now, as soon as that target has been hit, you then roll your stops to break even. So at this point, boom, when price all of a sudden starts coming up here, by the time price hits target 1, you're in a pain-free trade. So even if price does turn around, which it can on a down, if you're doing a counter trend, this market's been down, right? These bullish patterns on a downward trend can at times just kind of hit that first target. But when they complete, you will find in most cases, counter trend, they will give you that first target at least. In many cases, on these higher time frames, as you can see with this butterfly back here, we've already hit the 618, so we've already hit target 2s for this, for the butterfly pattern back there. But So to be clear, again, we enter at the 786. So I'll just map that out again, and there is a tool here for it as well, right? So you get your little harmonic tool, and this can be anywhere up to the 50. Can't come into the 50. It can be anywhere in that 382 range, down to 50. So that's fine. Up to the 127. Oh, sorry, I'm using the wrong tool. There is the cipher pattern tool. There we go. So first measurement, can't go past 50. That's good. Second measurement comes up to the 127. It can't touch the 1414, so even L all the way up to there would be valid. And then your entry is right on the 764. Okay? And you got your two positions and your targets. All right? First target at the 382. As soon as that's been hit, you're then rolling your stops that were down here at X, right? Just below, or just however you want to manage that. I typically manage it slightly above X whenever I traded harmonics. But feel free to manage risk how you see fit. As soon as that 382 is hit, you're rolling your stops and you're breaking even. So no matter, and right, you have two positions. So you've cleared one position, and that's complete bank. You're not giving money back here. You've cleared that position, and boom, and then your second target is at the 618. Okay? And that is the cipher pattern. All right? 382, 127, 764. All right, so the next pattern is the, I'm really old school. I like to use the measurements. I don't use the tools. The only reason that you see this tool down here and is because of nan, which is Python script for not a number. There's that nan right there, not a number, Python script, negative infinity. The reaction that you get off of these is ridiculous. But anyways, that was just a little nugget, I guess. But so that was our first measurement, right? That was our first pattern. I haven't showed you the 50 yet, so let's just say that was our first pattern at the 382. Boom. Let's say that price came down into the 50% down. Well, that changes the pattern entirely. That's going to be a bat pattern as soon as it comes into the 50%. And the bat pattern is really simple. And it actually has some pretty nice targets as well. It has probably the best, if not the best, risk-reward ratio for harmonics as well. So the first measurement, you have your X to A to B comes in at 50%, cannot go into. Let me just do that again so we're crystal clear here. We've got our X to A. All right, here's our X down at our start point. We come up to A, and then we come down into that 50%. All right, we do not touch the 618. This would be a Gartley pattern if it did, but we're at the 50% level right now, right? So we've got a bat pattern. As soon as I see that 50%, I know it's a bat pattern. The next measurement is pretty relaxed. It has to be at least 50%. So it has to come up from here. It has to come up at least 50%. But it can come up to a double top. It can even ping above this. It can make an actual double top, which in most cases will ping. The wick will ping slightly higher, but it won't close higher. And then it drops down. And then your entry on the bat pattern is, once you have that criteria, you're taking your low, your X point, up to your high, which in this example, I did the double top, but if it did just come in as this kind of more of a standard looking bat pattern, you would take it from there to there, but wherever your high point is there, and you're entering at the 886 ratio. And again, with all of these harmonics, there's ways to run confluent levels and line up Fibonacci ratios. So I won't get into that, but so this would be the bullish pattern at the 886 entry, and the exact same rules as all the other harmonics is most other harmonics is that you have your entry, your stops are below X, and your targets are the same, right? So you're entering at that 886, your targets are at the 382, and see that nice tight risk to reward here. Risking a lot less than the cipher pattern, which was at the 786, right? So this one's risking that much less. So that's why a lot of harmonic traders do like this one. Your first target's at the 382, second target's at the 618, and you want to be opening 2 positions here so that you're closing one out completely when you hit that 382. And then the second one is a pain-free trade. If the price does turn around on you, whatever, you've already made a winning trade. And the second one was just no good, right? So very nice in that aspect, and very controlled risk, right? You know what to expect every time. And so that's the bad pattern. The next pattern that I'll show you here is the Gartley pattern. And the Gartley pattern comes in at the 618, right? I'm just rolling down the Fibonacci numbers here. First was the cipher pattern in the 382, then we had our bad pattern, and we have our Gartley pattern now at the 618. And the Gartley pattern is very specific. We've got the 618, and then right, X to A to B at the 618, and then your B to C entry, your B to C point needs to be at the 618 as well. You don't want to see it go higher or lower. And then we're entering at the 786, but I use the 764. Your entry would be here. And the Gartley pattern is definitely one of the patterns that I like to use the extra bit of confluence to find some levels, right? So trying to find some levels off of here. Boom, you see how that 113 lines up nicely there? That would be my bit of confluence for a potential Gartley entry. Same rules apply. Entering at the D point completion, and you have your stops below X and your targets. And this is why a lot of people don't like the Gartley as much, because you need to have your stops somewhere down here, and your first target's only right here, so it's about a 1-to-1. Second target's up here, about a 2-to-1, so not quite as big as the other ones, but nevertheless still about the same performance wise. Right, so that's the Gartley. Moving along now to the 786 patterns. There's 2 of them. We've got the shark pattern, and we would calculate that by doing this here. And we're looking for the 1.618. And then we're entering. I hope I'm not flying through this too quick, but we're entering at the 764. Boom. That would be your bullish shark. That's kind of awkward looking. Typically it's gonna have a little bit more harmony to it, to its size, but something like that. That would be your shark pattern, and the same rules apply for targets, right? Target 1 here, target 2 here, stops down here at X. Again, how you manage your money is up to you, but for a bigger pattern like this, you have bigger stops and bigger targets. Now, if you can find ways to manage your money at a level around here or something, it's wonderful. Or if you're super patient and you really wait for an extra candle or 2 confirmation, you can probably manage risk a lot better here. Look at that, just tightening up to a level kind of randomly in here, even just kind of finding its middle point, right? That's a 4.6 wrist reward ratio. That's pretty solid on that shark pattern. Okay. The next pattern at the 786 or 762 would be, I can just show you right here. We have a live example sitting here. Here on the daily chart of the New Zealand CAD, you can see I'm locking on my magnet tool right now, and boom, taking that low, and what do we get? Exactly what I was just about to show you on the side there. We get a 764, and then the second measurement, it's been so long since I've traded harmonics, I believe it cannot touch the 618, and it doesn't look like this one did. Let's see. Alright, it did not. Came close. But typically a butterfly will not have this second measurement, will not touch the 618. If it starts going above here, you're probably looking at a shark, right? And this is kind of your phi, your mid ratio, your golden ratio as to which way this energy is going. So we get a perfect setup here, start breaking lower into the completion of the butterfly. And in that case, you see we get the 1618 here, right to the pip. So I'll just go through this one again, just so you guys can see it in real, in a real-time example. You get that, and I'll even do it in as if it were real time here. So whatever, we've got stuff going on here. Price comes back up. This is the thing that can make harmonics tricky, is that there's potential harmonics here as well, right? But a lot of the times they fit together nicely, you'll find. So let's just say that we just started looking at this chart now, and we're saying, okay, well, and this is a really nice example because it is a 764 pattern, so we're going to go right past all of our potential patterns. If price went up from here, it would be a 5-0 pattern. It doesn't though. So perhaps having a sell limit here would be nice. Having a buy limit up here somewhere into new highs would be nice. We do drop lower. Do we stop at the 382? Is this going to be a cipher? Nope. We're now into the 50. Okay. Well, is it going to be a bat pattern maybe? Nope. We're now into the 618. Okay, well maybe it's a Gartley pattern, right? Gartley patterns at the 618. Oh shit. Came all the way down into the 764. Pretty strong time to buy, especially with this type of fast play. You only have a couple. This is the Henkinashi, I don't know why I can't speak right now. Candles. So it's they're a little bit of a different look, but nevertheless, pretty fast play down here into the 764. Not a bad time to buy. But if you are looking for, we're looking for either, at this point, we're looking for either a butterfly or a shark, because it came into the 764. Now, this is the all-important time, is boom, we've hit 50%, you can go short right here, especially with these wicks going on. Not a big deal. But see how it just kind of channels its way up, and this is the daily chart, so this is where you can be losing some money. It can be tough in here. That's why some people like to wait. And this isn't even a completed pattern. I'm just talking about trying to trade these patterns as they're unfolding. You then get a bit of confirmation here, but then that last day, right? Because we're getting people entering right at this 50%, I'll bet you, and just no love. That's a good week or so of you being in a losing position, and chances are you'd be getting margin called or margin close out, right? Depending on your risk. But what you have from there is we don't get that 618, do we? We've then start closing lower. This close lower here is nice, not a bad time to enter here, as long as you can ride this kind of thing out. Wait for 2 candles. That's fine as well. Boom, there's our confirmation that the butterfly is taken off, and you can definitely ride this butterfly out to the 1.618 ratio. And I've just taken, right, here's our X to A to B, B to C. Really nice risk to reward ratio here for the sell. Especially we have a downward trend coming from previously. Trend is your friend. We're rolling it forward. And our entry, right, is at the 618, at the 1.618 for a completed butterfly. But there's definitely ways to get involved on the completion of these patterns. Now, if you're clocking harmonics regularly, you're going to find that they're all fitting inside of each other, and there's all sorts of patterns in here that you can be involved with already, pushing you in this direction. But for this particular example, we do get that 1.618, and this would be your valid entry. We can see as soon as that was this candle right here, where did we hit? We hit the 1.618 on this day right here. So we had one day sitting in the red, and then we were off to the races. And since then, we have not even came close to having our stop loss tested, right? And this is the thing, sorry, with the butterfly, this is why some harmonic guys don't like the butterfly, is because you have no X point to work off of. Personally, when I traded harmonics, I would just use other Fibonacci points in here. I would deck this thing out with Fibonacci measurements, and I would find something like this for a stop, or even something down here for a stop, right? So, a little bit tricky to manage risk off of the butterfly, but there's all sorts of ways that you can manage risk. You know, indicators can help you manage risk, all sorts of things. But you can see as soon as we've entered there, it's just went straight to target twos. Hitting that 618, we've done that, and good to go. Target twos have cleared, and you can see a bit of a sell-off now. Granted, also inside of this, a butterfly. All right, so we have our butterfly here. I'll just put it back on. I wanted to get rid of all those Fibonacci ratios. We've got our butterfly here, but also on the back end of that, we've got the shark here. Now the shark, as I showed you, needs to come up to a 764, and we've not yet got there. Have we? I have seen some traders on TradingView that trade the 618 with the shark, and they have had success with this, certainly. I've only traded a shark pattern maybe a few times in my life. They don't happen a whole lot. You know, and when you're trading them, typically any harmonic you're trading, you want to be trading on a bigger time frame. I only spent about a year or so on harmonics at most, you know, enough to master them and actually create a bunch of inverted and variants of them as well. But you really want to manage your positions on that. You know, manage exactly where you're, you know, what is an acceptable ratio for you for each of your patterns. And the ratios that I'm showing you here today are very common. They're what all of the other harmonic traders are basically looking at. You know, I saw somebody on Facebook today posting a bat pattern that that certainly did not hit, as I showed you in the video here, certainly did not hit the 50%. It still made a bat pattern though. It was kind of like this, right? It still kind of made that formation, right? So it was a little awkward looking. It still made that kind of formation though. So some traders will tell you, you know, try to find that formation. I am very specific about the ratios I need to see. I don't trade harmonics unless the ratios are being filled perfectly, just like they were here. 764. Did not touch that 618. And then right into the 1618 for entry. Zero stress on this trade. and immediately into target 2s. Right? And you know, if you want to risk a little more, you could be ballsy and enter this on a 618 shark pattern, right, off the back of this. But or you can just stick to the rules, and you know, who cares if I'm sure there's other pairs that have a completed pattern that you can be involved in, but who cares if maybe it's a couple days or a week that I don't need to trade? That's great. So what if the whole, I'm sure there's other markets that have patterns that you could be involved in right now that are active. This is just a pair that I happen to be trading at this point in time, and that I happen to be looking at. But you know, you want to make sure that you have those rules very clear as to where you're entering, so there's no confusion and you know, no stress when you're entering those positions. You know what to expect, and you know when you're right, and you know when you're wrong. As soon as these fib levels start getting crossed, you know you're wrong, right? So if this price would have came up and cleared that 618, I would have known this is not going to be a butterfly down here, and I would have been looking to buy this up longer for a shark pattern, right? For a potential shark pattern. But we did get the respect at the zone here, drop down into the 1618 to complete the butterfly. And right now we have not completed the shark pattern yet for my rules, but we're damn close, and we're certainly working our way there. And if you look at the previous video I made with some GAN levels, you'll see that that's about the zone that I was predicting for the completion of this move up, with a little bit of Fibonacci wizardry in here. There's our wave 1. Here's our wave 2, which is an ABC running flat. Which brings the 618 up a little higher. And we have a 1-to-1 ratio lining up flawlessly. A little bit higher there. And I'm just going to come back up here to see how that lines up with what would be a shark pattern. And you see the shark pattern would actually have to come up a little bit higher here. Now my wave sequence has us going to this point here, this bit of confluence of the 1618 and the 1-to-1 ratio. We are at a stress point though. You can easily see a spike all the way down here, and then 1, 2, 3, 4, or 5 back up into here, or even to the shark pattern here. I'd be quite surprised if we violated this level, though. That is some flawless confluence. So I think this is video's been good here. There's still so many more patterns to go through though. We do have the crab pattern. Now the crab pattern is a pretty sweet one. You get your 382 or 50 or a 618. It can be any one of these. It can be a 382, a 50, or a 618. So we'll just throw it right in there. call it good. And then your second measurement is going to be short, sweet, and fast at the 382. Boom, we hit that 382. And your targets are, or sorry, your entry, excuse me, are twofold. You have 2 entries here at a 2618. That would be your standard crab. And for this size of harmonic, you wouldn't likely see the deep crab come in. If this first bit was bigger, you could very well see a deep crab come in at the 3.618, which is why a lot of people aren't a huge fan of the crab, other than trading that last leg. And if it does hit the 3.618, definitely getting involved there as well. There is a lot of the times though, if price is doing something like this, it's probably not forming a harmonic, and the crab is kind of rudimentary, but I trade the crab, I trade the leg, the big leg. That's kind of my money play that I'm looking for in the crab. Others like to wait for the 3, 6, 1, 8 and then do the whole same shebang, right? You got your targets, stops just below, whatever, calculating your stops however you see fit, and then your same original targets, right? And that would be the crab, and that would be the deep crab at the 3, 6, 1, 8, and that would be the standard crab at the 2, 6, 1, 8. And the last harmonic that I'll show you here, we've been going on for 35 minutes already, fuck. The last harmonic that I'll show you is probably the most complex one. It's a 5-point pattern, and that comes in at the 236. It does not touch the 382 for the first measurement. We then get a second measurement, taking from A down to X. The second measurement comes in at the 113, does not touch the 127. The third measurement, I'm actually measuring from B to A. And you can see it's getting pretty clustered in here. I'll remove those other levels, and this measurement needs to hit at least the 1618 down to a 2.24. I don't have that here, but 2.24. So it can go anywhere from in the 1618 down to the 2.24. A lot of the times you will see it come right down close to that 2.24. I really haven't seen an example where it doesn't. And then your fifth and final measurement, creating that pyramidal structure, is your, just to give you that pyramid structure a little better there, we're getting a 50% retracement. So boom, and 50% retracement is your entry. This would be a bearish pattern, and your targets are the same. Right, you have your stops above structure here, even just above, even at the 618 ratio, and you're gunning for lower lows in this case. I like to leave all the Fibonacci points on when I'm trading harmonics, and I like to see what lines up. Even having negative Fibonacci measurements in here is not too bad. Laying things backwards like that, inverted. So you see how that 386 and the 1618 just lined up beautifully. This, if I was trading harmonics alone, would be my harmonic target. Okay, and that is the 5-0 pattern. So just to review, you have your all-important X to A to B measurement. This is the important one. And now if it falls in at the 236, it's going to be that 5-0 pattern, I just showed you, or it's going to be the cipher. If we hit the 382, we're looking at the cipher. If our first measurement, our B point, comes in at the 50%, we're looking at a bad pattern. If it comes in at the 618, we're looking for a Gartley pattern. If we get that 764, we're looking for either a shark or a butterfly. Okay? And again, the 886 is where you can actually create some inverted harmonics, but that is typically just the bat pattern entry, right? So you might have to review this video a couple times. I tried to go through it as fast as possible, but 40 minutes in here. I hope this was helpful. Get out there and test it. Get in the markets on these daily charts, 4-hour charts. I like the daily because I can keep the pattern kind of small. Even the weekly, however big you need, that way I'm not way out here, kind of, trying to measure this pattern like this, right? I can see it a lot better on the daily chart, right? And boom. You got your shark pattern in the background. Boom, boom. So get out there, try it out, and let's make some money, baby. Let's go.